Meta's meltdown, Chipotle chugging, and IBM BMing. Let's talk earnings. Welcome back to another video. Today we're going to talk earnings. So on the agenda today we got Meta, we got Chipotle, and we got IBM. So let's go ahead and kick it off with Meta. So I got my notes here, so I'll be referring to those. So let's get into it. So when we look at earnings, there's some important elements that we need to understand first. You have top line growth, which is gross sales, total revenue. You got bottom line growth, which is referring to net earnings or profits. And then you have your guidance. So this is the expectation of future profits. So let's start with Meta. Meta is a social media giant. Most of us know what Meta and or Facebook is. We all kind of use it. So when we look at the revenue they reported, they actually had a beat on the top line and the bottom line. So when we look at the revenue, Meta did $36.455 billion versus the expected $36.156 billion. So that's a beat there. Then when we look at their earnings per share, they did 4.71 versus the 4.33 that was expected. Also, when we look at the ad impressions, year over year is up 20%, which is really impressive. Anything over 1% is considered a win, and they did 20%. But what really slowed Meta down today? The guide. So they had weak guidance, meaning that they said that the revenue was not going to grow as strongly as once expected. And that's only because they're spending more in AI development. So they're trying to spend more money in generative AI, which is called, which mainly deals with these different little tools that you can click on and use, and it'll generate ideas and stories and videos and things like that for you. So they're gonna be putting more money into that. So I see Meta as even though it's oversold between 12 and 15% after hours, is something crazy. It's not here on the charts. We're on Yahoo Finance right now. It's not here on the charts, but Meta is hanging out around this 400, 410 kind of range. We're kind of in this no man's land range here. And I think looking back on this 6 month to a year type chart, I think there's strong support around this 380 level if you look, but we're kind of hanging out in no man's land once you check after hours around this, like I said, 400 to 415 level. So Meta's definitely on my radar for something to buy. I think it's a little oversold at the moment. But yeah, so that's Meta. The next stock we'll talk about is Chipotle. I always spell it wrong. So we got Chipotle here. This is the day chart. Let me switch it over. Okay, Chipotle Mexican Grill. Most of us are eating at Chipotle. I think it's better than Moe's. Don't quote me. But let's look at the earnings. When we look at Chipotle, they definitely topped expectation on the top and the bottom line. When we look at the revenue growth, revenue was 2.7 billion versus 2.6 billion. So that's good. EPS, so earnings per share, they did 13.37 versus 11.68. A good beat there. And then their net sales have been up this first quarter, up 14%. And then the foot traffic in and out of their locations is up 5.4% year over year. They also had first quarter When we look at their first quarter, they opened up 47 stores. And for the year, they projected that they're trying to get 285 to 315 stores open. So they're really shooting for that 7,000 stores open worldwide for the year 2024. And if I'm not mistaken, I think they even opened up some stores or trying some stores in Australia, which they said is going pretty good. They also, the board issued and agreed on the 50-to-1 stock split. And after hours, if I'm not mistaken, Chipotle ran up $80. So it's definitely in the $3,000 range. So a lot of people want to know, do you buy before or after a stock split? If I'm not mistaken, I think the stock split is in June. It really doesn't matter, but usually you see stocks run up into the stock split, and then after the stock splits, you'll see the stock pull back a little bit. So if you want to get into Chipotle, which is a great stock, I'll wait till after the split, let things cool off, get in on a potential pullback. And also, Chipotle guided higher, so that definitely helped their earnings. All right, next on the list is IBM. So let's look them up. So IBM, they took a little bit of a misstep today. Their earnings weren't really bad per se. It just wasn't what the street was expecting. So they end up having, let me introduce IBM. IBM is a software hardware company. They do consulting. And so they provide a lot of AI tools that help businesses out. So getting back into their earnings report, they had a top line miss and a bottom line beat. So when we look at the revenue, they did $14.46 billion versus 14.55. So that's a miss there. When we look at their earnings per share, they did 1.68 versus 1.60. So that's a little bit of a beat there. They're also acquiring, in some positive news, they're acquiring this company called HashiCorp. And so they're more of like a cloud software maker. So that'll boost their business overall, which I think is a good pickup. They're trying to finalize that before the end of the year. And oftentimes, it's kind of a double whammy with this report of them trying to get this company and them missing on part of their earnings. You usually see the company that is the acquirer, or the company that's going to buy another company, you see that stock trade down. And then you see the company that's becoming acquired trade up. So when you look at the stock price, when you look at Hashi, the Hashi company is actually trading up right now. And they also had conservative guidance. So a lot of times you'll see a stock pop when they say, hey, in the future, our revenue is going to grow by this much percent. They pretty much just came out and said, hey, yep, we said it's going to grow X amount of percent. It's probably going to stay that, or maybe a little lighter. And so with that, the street wasn't really too fond of. So let's look at the chart. All right, so we're on the 6-month chart here, and it's not down bad after hours. It's not really shown here because it just shows end of day, but IBM is down after hours to right around that 168 level. So we'll look at 168. So it's right around in here. Which seems, if you look back, and this is, like I said, on the 6-month chart, seems like a pretty good support level here. I'm not really the biggest fan of IBM, but if I'm going to buy in, yeah, I would see myself buying in right here. So I hope this video was helpful. If you really enjoyed the content, please like, leave a comment, subscribe, tell your friends, help your boy out. So until the next time,